everybody. This is Kris from Block Advisors, which you might also know as H&R Block. So I know that look, I'm putting my questions down. I don't even need them. So I know you think we're going to talk about taxes, and you might be thinking about looking at your email, but I'm going to tell you not to do that, because what I want to tell you is that Kris is actually an accountant, a real-life small business accountant who has clients who are small businesses. So what I'm saying is you're about to get free accounting and tax advice from Kris. So do not check your email right now. Okay, you ready?
Let's go.
Okay. So you are here to talk specifically about the One Big Beautiful Bill and some of the tax implications of that. But I wanted you to just tell them a little bit about you and Block Advisors, because until we really talked backstage, didn't understand that as a small business, you can go to Block Advisors and they can become your small business accountant. I was telling you about my husband, who's in the audience. I will not point him out because he will die. But he's a small business owner. We are in the market for an accountant because we weren't happy with our accountant. So I do not want this to be a sales pitch, and we already talked about that, but just tell them your experience and Block Advisors in terms of what Block Advisors does for small businesses.
Be a pleasure. So if you remember nothing else of what I say, we're here to help. But no, seriously, I'm proud. Over the last 15 years, I've built what's the now largest tax practice at Block Advisors in New York City, working with families and small business owners. And you probably know H&R Block, 10,000 locations across the country, 350 Block Advisors locations, and we really focus on working with folks who have year-round tax interests and needs. So I like to make sure that we're not only looking back at what's already happened, because it's essential to get filed what needs to be filed correctly, accurately, optimally, but also looking forward to tax strategy and tax planning. Because before I came to Block, before I was a tax guy, I was an entrepreneur, and I was struggling with these questions of how do I do it better? What structure's right for me? How do I grow my net worth over time? And I've come to view the tax code as a strategic tool to help small business owners grow their business and help you grow your net worth. And so that's what we try to do, is translate the tax technical into presentable business decisions so you can make the right decision for you.
So let's do the free advice.
Let's do it.
So let's talk about the One Big Beautiful Bill. So something called the Qualified Business Income Deduction. What is that, and why do these people care?
Great question. So what we know is that most small business owners do not have a regular corporation where the corporation pays the tax itself. Most small business owners are paying the income taxes on their personal income tax returns, whether that's as a freelancer or sole proprietor on Schedule C, or they have a partnership or S corporation where that income ends up on their personal income tax return. And hopefully I haven't put you to sleep, because I promise this will be exciting. Going back almost a decade ago, the Tax Cuts and Jobs Act gave a nice cut to the corporate income tax rate from 35% to 21%. But for all those small business owners, they were still paying tax on their personal income tax return, often at those higher income tax rates of up to 37%. So the qualified business income deduction was created as a way to bridge that gap, to make it better for small business owners. And essentially what it means is that up to 20% of your business profit can be taken as a tax deduction to reduce that tax rate, often from the mid to high 30s down into the 20s. What does that mean for all of you? That's money in your pocket. So that already happened a while ago, but when the Tax Cuts and Jobs Act was created, this was a temporary fix, and it was scheduled to expire at the end of 2025. So what the One Big Beautiful Bill Act, or OB3 as we call it, because it's a mouthful, we love acronyms, what it did was it took this temporary fix and made it permanent. And permanent is magic when it comes to planning, because so many small business owners I work with say, well, don't tell me what it was like last year. I want to know what it's going to be like this year and the next year and the year after that, so I can plan and make investments accordingly. And so in addition, it increase some phase out thresholds, a number of different provisions that were favorable and positive, but at the end of the day, the key takeaway is it's now a permanent provision to help small business owners pay less in federal income tax.
Okay, so let's talk about depreciation. I think
Woohoo.
you must be so fun at a party. After you have a glass of wine, we're going to talk about this again. So depreciation, I think people conceptually understand what depreciation is, but why is it relevant right now?
Great question. So, long story short, most businesses, as you know firsthand, have to make investments in equipment or other items that's going to last over multiple years. And so in accounting speak, we think about, well, can you take the cost of that all up front as a deduction where you're going to get an immediate tax benefit for everything you've spent? Or is that something where that tax benefit is going to be spread out over a number of years, whether it's depreciation or amortization? And so the One Big Beautiful Bill had improvements in two key areas. One is Section 179, and the other is bonus depreciation. I'm not going to bore you with all the details. The key points are to say that with Section 179, which allows immediate expensing, it increased the thresholds. So businesses can now take more in equipment expenses under Section 179 than before. Again, more money in your pocket, more money to reinvest in your business. Similarly, with accelerated depreciation or bonus depreciation, it was starting to phase down. So you weren't able to take every dollar you spent up front, you were having to take it over time. And the One Big Beautiful Bill Act fixed that to bring back 100% bonus depreciation. So the key takeaway is that for many businesses that might have said, okay, well, I get if I'm going to spend $500,000 in equipment and my federal, state, and city, I'm from New York City, income taxes are something like half, well, I'll save half that in tax, right? It got more complicated because that savings was over time. And so what the One Big Beautiful Bill did was it brought back that immediate expensing for more of those depreciation items, keeping more cash flow in your pocket. And if you haven't had a chance to work with your tax advisor to think about making those investments sooner, now's a great time to do it.
Can you be specific about what really qualifies as equipment? I mean, are you talking about a truck? Are you talking about a kitchen stove? Like how loose is that definition?
Yeah. So broadly speaking, items that are going to fall under depreciation are going to be things that last more than a year, right? So it could be computers. It could be, as you said, vehicles. Vehicles have some special rules, so beware of that. It could be improvements into a space that you're leasing. Of all sorts of things that are going to last more than 1 year would fall under this rubric.
Not to overcomplicate it, but does owned real
Yes.
estate count? But you're saying that even if you don't own the building that your business is in, but you lease it, but maybe you're doing some renovations to it. So I think that's good information that maybe people didn't know. Okay, let's talk about research and experimentation deduction. Now, if I were sitting here, most people are probably like, I don't do any research, I don't do any experimentation. So what is that deduction, and like how liberal is that definition?
Why does it matter?
Yeah.
So I'm a big believer in innovation. I see it in the small business owners I work with. I started my career at Goldman Sachs investing in biotech companies, so I feel that the research and experimental expensing is near and dear to my heart all of my professional life. And so, again, this is one of those where if you're making investments in an improvement or process, I like to say where there's uncertainty about the outcome, it may fall under research and experimentation, or R&D is often what we might say. And so, again, this is an area where historically, if there was an investment, let's say you're putting $1 million into a research study, in the good old days, that was an immediate expense. There was a change in the tax law a few years ago where if it was a domestic research and experimentation expense, that had to be spread out over 5 years in recognizing the tax benefit. And if it was a foreign expense, it had to be spread out over 15. So what the One Big Beautiful Bill did was it brought back the ability to upfront take 100% of that domestic research and experimentation expense in that first year that it was incurred. Importantly, also, there were some retroactive provisions. And for those of you who incurred research and experimentation costs in 2022, 2023, 2024, listen up, because seriously, now is the time. Because the bill allows you to go back and change what was done for those years on your already filed tax returns and potentially get money back. But the deadline to do that is July 6th. So now is the time to be on top of it. Also, there's a provision to allow you, if you've been amortizing over 5 years, to take those on your 2025 and 2026 tax returns. And literally last night, I was working with a client, working through the numbers, and for them, that's going to make a difference on their 2026 tax return of $15,900 that they're able to invest in an additional research study that otherwise they wouldn't be able to do.
But can you be specific about what qualifies as research and development? Because everyone who owns a business has done some level of research and development before they even started the business to determine if their product or their service, was viable. So, what is the technical definition of what qualifies?
It's a great point, and I might sound like a tax geek here. So I would say, if you think you have something that you're investing in that sounds like it might fall under this, talk to a tax advisor that specializes in this area, right? But generally speaking, it's where the outcome is uncertain, right? And so you could be investing in a new process. You could be investing in a new computer program. You could be investing in a research study. You could be investing in patents. There's so many things that can fall under this umbrella, but the key idea being where the outcome is uncertain.
Okay. I don't even understand my own question on the next one. So I'm going to try to ask it, but obviously we need some clarification. So I guess there are some issues in previous years for employers whose employees either are paid overtime or make tips in addition to their salary. And there are issues around how the employer has to report that. That is the extent of my knowledge of this issue. So can you explain to our audience who have employees what the issue is?
It'd be my pleasure. So we're focused here on the small business tax provisions, right? And there's lots more provisions. We just tried to focus in what we think are most relevant for you. On the individual personal income tax side of things, the One Big Beautiful Bill Act introduced some new deductions for folks in businesses that typically had tipped workers, that they could exclude from their income some of their tips. They could exclude from their income overtime. Not all that they got paid, but that extra, for time and a half, that extra half. And so 2025 was largely a transition year, because the forms that we all get as employees or 1099s hadn't been updated to account for these changes, because the bill just changed last summer. In 2026, the forms are being updated. So 2025 was kind of this transition year where with many clients, if they were receiving overtime, we would actually ask them to bring their last pay stub so we could figure out what was that overtime piece for them. So why are we talking about it here with you all? Well, if you have employees and you're doing the payroll yourselves or your payroll department, now is a great time to be sure that in 2026 you are tracking any relevant qualified tips and overtime so that when those W-2s get issued in January to those employees, you got it all right. Because we certainly saw some employers that were already doing that voluntarily this past year, but then had to go back and correct the W-2s. Nobody likes corrected forms, right? If you're working with a payroll processor, make sure that you're in touch with them about their process, that you're giving them the data they need so you don't have surprises in January, because I promise if it comes as a surprise to you in January, you're then going to hear from your employees about it at the end of January and February when they go see their tax person.
All right, thank you for explaining that. 30 seconds left. What is the #1 tax mistake you see small businesses make?
So I know it's not going to sound exciting, but it's record keeping. So often we'll see folks who will come to us and they haven't really kept track of things through the year. So I'd say, whatever stage of your business you're at, make sure you have a system that works for you. For brand new entrepreneurs, it can be as simple as keeping their personal expenses through one card and their business expenses through another card. As you grow, working with a bookkeeper or bookkeeping firm that can help you, I would say that's the #1 thing that makes a difference and reduces that stress level around tax time.
Well, great. Thank you so much, Kris.
Thank you.
Appreciate it. Thanks.
Pleasure.